All right. Good morning, good evening,
Hello,
wherever
hello.
you are streaming from. Welcome, everyone. We are live. Just give me 1 second. Here we go. All right. So, I want to welcome everyone today. We have some really good stuff going for you today, and I want to thank everyone for joining in. Um, Hey everyone, welcome back to the latest episode of the Realty with Roy Summer Homeownership and Financial Educational Series. If this is your first time joining us, drop a one in the chat so we can show you some love. And if you've been rocking with us for a while, welcome back and thanks for tuning in again today. I'll quickly introduce myself for those of you who may not know me. I'm Royce Williams, a licensed Florida realtor for over 14 years now. I just had a anniversary here in June. And I specialize in helping first-time homebuyers, military families, and investors. I'm also the author of Next Stop Homeownership, a top-selling interactive planner created to help guide you through the entire home buying process. Real estate is sincerely my passion. I truly believe in building wealth through ownership. That's what really drives everything that I do. Today's session is all about homeowners insurance, a topic many people skip over, but one that is critical to protecting your biggest asset. Whether you're a brand new homeowner or have owned your home for years, this class is packed with information you need to know. We'll be breaking down what to look for in a policy, common mistakes to avoid, and how to make sure you're truly covered when life happens. Before we jump in, I want to give you guys a quick reminder. Wherever you're streaming from, please don't forget to like, subscribe, and share. Let's spread the knowledge let's spread this knowledge with as many people as possible. Now let's get into it. Now, feel free if you have any questions to post your questions in the chat, and Tanya will answer as many as time permits. If we don't get to your question, feel free to reach out to her directly. We'll be posting her contact information at the end. All right. So without further ado, let me go ahead and introduce today's guest. Tanya will be teaching our homeowners insurance one-on-one class. She is someone who truly knows her stuff and cares just as much as you do about protecting your biggest investment, which is your home. Tanya Johnson is the agency owner of Reliable Insurance, the Johnson Agency, and brings over 25 years of experience helping Florida homeowners and business owners get the right coverage without the stress, okay? She's not just an insurance broker, she's an advocate who takes time to educate, which is why we're here today, empower, and walk with clients through their options so they feel confident, not confused. Tanya's helped countless homeowners from me and for others avoid costly mistakes by finding coverage that's actually right for their needs, not just what's the cheapest on paper. She breaks things down in a way that makes sense and always goes the extra mile to make sure her clients are protected from the unexpected. On top of that, she's an educator at heart, working with nonprofits and local housing organizations to make first-time homebuyers know how to safeguard their homes and their future. She holds a bachelor's from USF, go Bulls. I'm also a Bull, an MBA from St. Leo, and some of the top designations in the industry. So yes, she's highly credentialed. Okay, you got a real expert today. But what really stands out about her is her heart, her knowledge, and her commitment to serving her community. You're in for a great session. Let's welcome Tanya as she walks us through what every homeowner needs to know about protecting their home the smart way. All right, Tanya, I will turn over the reins to you. And so grateful for having you today. And I really appreciate you taking the time. Let's learn about homeowners insurance.
All right, let's do it. Thank you so much for that beautiful introduction, Royce. And hello to everyone out there. I'm so glad that you're taking the time to go through this process. As Royce stated, a lot of people kind of bypass homeowners insurance and they look at it as more of a pain than an asset to them. And so I hope today's conversation will help you look at that a little bit differently, especially for those that are starting the journey for their home. Now, I'm going to walk through, before we jump into the presentation, though, I wanted to make it a little bit fun. I wanted you to play along. If you have your phones out, I want you to snap a picture of this little bingo card, and I want you to see how many of these words we talk about today. And these are all words that are related to homeowners insurance that you will hear. You'll hear me say these words. You will hear your real estate professional say these words, and this will be part of your home buying journey all along the way. So I want you to familiarize yourself with them. All right, and I'm going to give it a second if everyone has had a chance to get their phones out and get their picture snapped. All right. Now, Royce mentioned that I'm a broker, and I feel like it's important to help people understand what an insurance broker is, what that means. So, as an insurance broker, I do not represent any one company in particular. My representation is of you as the customer, as the client, as the one purchasing the home. And so I am working on your behalf to ensure that I'm finding the best options that are available based on what your needs are and what your budget provides for. And that is going to include expert advice and assessments. I really want you to look at me as a strategic partner for you as you think about your needs as you're purchasing your home. Also, we find solutions that are customized specifically to what it is that you would like to have covered when it comes to your home. And you'll see as we go through the presentation today that there are many things that we can look at in terms of endorsements and coverage options. We are also here to assist with the claims process. This is the most difficult part for any homeowner to suffer a claim, and we want to make that process seamless for you and as pain-free as possible. And so we do provide you with that assistance, and then just ongoing support, anything that you need. As you all know, our lives change and improve along the way. And as we go through those changes, our needs may change. And so we want to be here to help support you through that. Now, why insurance matters when it comes to home ownership. Protection, number one, hands down. You want to make sure that this asset that you're purchasing, and for many of us, this is going to be the largest asset that we're purchasing in our lifetime. We want to make sure that we have the proper protection in place. And we also want to make sure if we're going to have a lender involved that we're meeting those guidelines, right? And that's the second part, that required piece. The lender is going to require that you carry homeowners insurance for as long as you have that loan in place, whether that be a 15-year loan or a 30-year loan, even 40-year mortgages. This is going to be that requirement that you carry the entire time that you have the mortgage. And then finally, for catastrophes, catastrophic losses are really challenging, as I mentioned prior. And if you've ever suffered through anything like a whole home fire or a hurricane, you'll know that it is very important to have this coverage in place so that you can be made whole again. And that is really the whole importance and reason why homeowners insurance matters and why it is required. All right, now let's talk about the homeowners insurance timeline. When it comes to the timeline, a lot of people will typically wait until they've worked with their real estate professional to make an offer on the home. And when they are in what is called an inspection period, and that is where you have so many days to get the home inspected by a professional home inspector, to have everything looked at. Then after that's resolved, most people start the process to look for homeowners insurance. But what I will challenge you with is to look at it a little bit differently, because the landscape in Florida has changed and continues to change as we move along, especially as we suffer more and more catastrophes like flooding and hurricanes. Is that I want you to begin the process as you are looking at homes with your real estate professional. So if there's a home that you really have your heart set on, I don't want you to make the offer just yet. I would like for you to reach out to a professional such as myself to start to gather information about what the anticipated cost might be for that home. Because the last thing that I want to see happen is somebody get their heart set on a home only to find out that they cannot afford the insurance costs that are related to that home. That is devastating for a lot of people. And especially it happens when they don't realize that the home may have been reclassified into a high-risk flood zone area, such as an AE flood zone or a V flood zone. And that's V like Victor. And so if you are starting that journey and you have not yet started to look at homes or anything, just remember this process. As you start going along, you want to get quotes early and you want to start to determine if this is going to fit within your overall budget can you afford the cost of the homeowner's insurance. Now, when you complete that process and you start to get the quotes, you find a quote that is suitable based on the house and everything, then that's when that inspection process is going to begin. So you will, again, work with your real estate professional as well as a licensed home inspector to have the home inspected. And for insurance purposes, there are two very important inspections that we like to see. The first is going to be a 4-point inspection. The second is going to be a wind mitigation inspection. And we are going to actually get into those inspections separately on one of the future slides, but I wanted you to at least know that in the process that there may be an inspection that is required for homeowners insurance. Now, once we have finished with the inspections and we determine that the eligibility is there, that means that we can place the risk with an insurance carrier. Then we start the application process. And in that application process, we're going to be asking a number of upfront underwriting questions. The insurance carrier wants to know things like, is there a trampoline on the property? Is there a pool on the property? Does that pool have the proper fencing around it or screened enclosure around it? They're also going to want to know if you've ever filed suit against a homeowner's insurance company in the past, or have you filed any claims in the past? Because some insurance carriers will not allow you to move forward to get insurance with them if the answer to some of those questions are yes. And so it's really important for us to go through what all of the exposures might be that the insurance carrier may be taking on to determine whether or not we can move forward in that process. And if not, it may not be that it's a no, it may be that it requires additional underwriting directly from the carrier. And so we may need a little bit of time prior to your closing date to work with that underwriting department to provide them with that necessary information. And so this is why we want to get that process started early so that we have enough time to deal with that if we have to. The next thing, let's say we get through the application process, everything is good, then we are going to finalize everything by getting all of the necessary signatures that are required. And then we move into the closing step. And that's where we forward all of the documentation showing that you have secured an insurance policy. And if you have an escrow set up with your lender, we're going to also provide them with an invoice for that insurance cost. And then you will get something called a clear to close, meaning that you have satisfied all of the obligations that they've requested of you in terms of documentation, and they're going to be moving forward with giving you the keys to that home and sitting down at the table with the title company and getting everything signed off. And it's a really great day when that happens. All right, as I promised, the inspections. I wanted to address this as its own slide because there's so much that goes into the inspections, and a lot of people don't realize the necessity of these. And so I like to break this down a little bit further. Now, when it comes to the inspections, as I mentioned, there are two: the 4-point inspection and the wind mitigation inspection. The 4-point inspection is going to be a mandatory inspection by the carrier, and this is going to be in place when the home is greater than 20 years. If the home is under 20 years, a lot of carriers do not require that 4-point inspection unless there is a certain circumstance, and then in that circumstance, that one-off circumstance, they may require it. But as a whole, in general, if the home is under 20 years old, that means that the 4-point inspection will not be required. And the 4-point inspection is important because it looks at some of the main systems of the home. It looks at the electrical. We're checking to ensure that there aren't any issues with the electrical in terms of exposed wiring or things are not grounded properly. We're also looking at the HVAC system, so your heating, ventilation, and cooling. We're also looking at the plumbing system. We want to make sure that there aren't any leaks. And with that plumbing system, we're also looking at the water heater. A lot of carriers will not accept a water heater if the age of the water heater is more than 14 years old. Some will accept it if it's 20 years old, or younger, if it is within a garage. But if it is within the home itself, a lot of times that allowance will only be 14 years and newer. And then we look at the roofing system, and the roof has to show that there is at least 5 years of useful life remaining in that roof. Okay, and that is going to be for those homes that are over that 20-year threshold. Now, there are certain circumstances that the 4-point inspection may not be required. There is one that I know for certain with Citizens, which is the state-run insurance carrier in the state of Florida. If you are insuring a condominium unit, you do not have to have a 4-point inspection with them. But for all other home types, single-family homes, duplexes, manufactured or mobile homes, they are going to require that 4-point inspection. Okay. Now, the 4-point inspection cannot note any deficiency. So if there are any unsatisfactory marks on that 4-point inspection, you will have to work with the seller, as well as your real estate professional, to ensure that those things are addressed. And we will have to have an updated 4-point inspection, or we will have to have documentation by way of receipts from licensed contractors, as well as photos showing evidence that a repair has in fact been made. Now, the only exception, once again, that I can think of amongst many of the carriers is Citizens. If you are purchasing a brand new property and the roof has a deficiency, but it's new to you, so it's not that you have neglected it and haven't kept up with the maintenance, they will allow a 60-day turnaround for you to have that roof replaced. And that's really important because a lot of people are working with sellers to make that purchase, and perhaps there is some type of arrangement or concession, as it's called, where the seller will provide monies towards the roof, but it's when the closing happens. And so they'll be able to give you X amount of dollars towards getting the roof repaired. If that is the case, we will need a signed contract from a licensed roofer to submit to the underwriting department. And then the underwriting department will give the sign off, but that does take about 7 to 10 business days for that to happen. So if you're looking at homes, you want to keep that in mind, that if the roof is one that needs to be replaced, there may be some additional time that's needed to ensure that we can in fact get that acceptance or that approval from the carrier in order to move forward with it. Now, when it comes to the wind mitigation inspection, that one is a voluntary report. It is optional. You do not have to provide that to the carrier, but here's why you will want to. Again, if your home is over that 20-year threshold, the wind mitigation may give you some really beneficial credits that bring the premium down for the home. And it's going to look at certain characteristics of the roof. It will look at the shape of the roof. It will look at the roof deck attachment. They will try to determine if there is a secondary water barrier between the roof shingles or the tiles or the metal and the underlayment, which prevent water from seeping in to the home. And then they'll also look at things like impact windows and doors that you may have, which is something really important because that helps keep the wind out of the home. All right. Now, how do insurance carriers determine insurance premiums? They look at a number of things. I think you could pick up on the fact that roofs are important and the age of the home is very important. When we're talking about newer construction, insurance carriers find that newer construction is going to be up to the current building code. And so that typically means that the insurance costs are going to be lower with new construction as opposed to homes that are older. They're also going to look at something called an insurance score. A lot of carriers are utilizing this, and I will touch on this at the end of the presentation to talk about the insurance scoring and the various things that insurance carriers are looking at when it comes to that insurance scoring. But just know that it is an important aspect of the model, and it's going to be similar, feel very similar to a credit score model, where based on certain factors like your payment history and the length of time that you've had credit, well, think about it from an insurance perspective. Those types of characteristics are looked at in that insurance scoring. Square footage of a home. So the size of the home is going to matter. The bigger the home, right? The more home there is to insure, that might carry a larger cost with it. Also, the characteristics of the home itself. So what type of flooring does the home have? What is the home made out of? Is it a masonry home? Is it a frame home? We'll look at the roof type. Is it a shingle roof, a tile roof, a metal roof? Those all mean something different when it comes to the cost of it. We'll also look at any other special features such as fireplaces, pools, pool cages, solar panels even. And then we look at the coverages, the endorsements, as well as any deductibles that you are going to choose. That all goes into determining what that final insurance premium is going to be. All right, so primary insurance coverage. I like for you to think of the insurance policy as two separate pieces. The first is coverage for the building itself, and then the second is for your negligence. So let's focus first on the building coverage and what all of that entails. The primary coverage, the very first coverage, is going to be coverage A, which is your dwelling. And we're talking about the building itself. And so this is what we're looking at when we come up with what we call a replacement cost for the building. We're going to look at all of those different features and characteristics of the building. And based on those features and characteristics, we will come up with a dollar amount that will be the replacement cost, or the estimated replacement cost for that home. And it looks like we have a question. Does hurricane season affect the pricing of insurance? No, hurricane season does not affect the pricing of the insurance. I know there tends to be a fallacy about that rates increase when it's hurricane season. But no, the rates are the rates. Insurance carriers do file rates with this state, and based on whatever filing it is that they do, the state may approve it. They may ask them to go back and amend it. But the state takes a very careful look at all of those rate filings that carriers do. They cannot just arbitrarily decide to increase rates just because it's hurricane season. That is not part of the regulatory environment that insurance operates in. So there's a lot of sign-offs that have to happen in order for those rates to be charged by those carriers. But excellent question. Thank you for that. Now, when we have that dwelling coverage, let's say that we've determined that the price of the building is $300,000, then the next coverages that I'm going to talk about, they all function as a percentage off of what we determine that coverage amount to be for the building, for the dwelling. So other structures is going to be anything that's not permanently attached to the building. So I want you to think about things like sheds that may be on the land, right? They're on the same property, but they're not part of the main building itself. Or you may have a detached garage, or you may have a pergola or a gazebo on your property. You may even have fencing around your home. In all of those cases, those are going to be something called other structures. And the other structures, the typical percentage is 2% of what we are insuring the building for. So again, in the example where we're insuring the building for $300,000, the other structures would be 2% or $6,000. Okay. Now, the next coverage is really important. It is coverage C, which is your personal property. So I want you to think about if you flip that house upside down and you shook it, everything that falls out of that house that isn't permanently attached to the walls is going to be your personal property. And this could be anything from an appliance to your pots, pans, and dishes. It's going to be all your clothing and shoes, your furniture, anything that you have filled in the home, all of your personal belongings. And that is going to be a percentage of the dwelling amount. Usually it's anywhere from 25% of the dwelling amount all the way up to 75. Sometimes I've even seen 80% with some carriers. And so you have to think about the amount of personal belongings that you have and how much coverage you want to have in place for that. If we're talking about 25%, then that would be 75,000 of that 300,000. If you're going to do 50%, then that's 150,000, right? And so it goes just like that. Now, the next coverage is loss of use. And loss of use is really important because with loss of use, this is going to help you in the event that you have a claim. So let's say that unfortunately you had a kitchen fire and you could not live in the home while the contractor was fixing up the kitchen and getting everything in place, and you had to live maybe in an Airbnb or in a hotel for a period of time. The loss of use is going to extend up to a certain dollar amount. Most carriers do 10%. There are some carriers that offer 20% of what we're insuring the building for. And this will help you with those additional living expenses that you may incur as a result of that claim. Now, why is that important? Because when you have a claim, if you have a mortgage on the home, the lender is still going to require that you pay your monthly mortgage. So even though you've had a loss, that is not going to prevent you from having to pay your mortgage. You still are responsible for that while the home is being fixed up. Now you have to live elsewhere, and that's an additional expense. So the insurance company wants to take that off of your plate by offering the loss of use that allows you to secure additional housing. And that may mean additional travel mileage. It may mean that you can't really cook. Now you have to eat at restaurants for a short period of time, and they are going to help to cover those costs for you. You want to make sure that you keep all of your receipts intact and that you work closely with any claims adjuster on that concern. But again, in the example where you have 10% of coverage, we're insuring the home for $300,000, you would have $30,000 of coverage for loss of use. Okay. Now we have the second part of that insurance policy, which is your negligence liability coverage. Coverage E, personal liability. So if you ever have anyone who is not yourself or a resident relative, right, that is on the property and they are injured, that person could be liable to sue you, especially if they determine that you're negligent. And it could be something as simple as perhaps there was a hole in the yard. Maybe you had a barbecue in the backyard. There was a hole in the yard or a little divot in the grass. Someone tripped, they fell. Maybe they're a dancer, they've broken their leg. Now they're not going to be able to complete their dance career. It's going to prevent them from working for the next 6 months. And they're going to sue you because that is impacting their ability to earn a living. That is an extreme example, but it could happen, right? And so this is in place to protect you because whenever you own property, if people are on your property and they're injured, that could make you liable. Now let's use a less extreme example and let's talk about medical payments. Medical payments is going to be for things, it's a kind of a no-fault coverage. If you're familiar with your auto insurance, with the personal injury protection and the no-fault laws that we have for auto insurance, medical payments kind of follows that same principle where it's not a fault that is determined. But let's say that I'm visiting you, I trip, maybe I sprain a pinky. It's very minor. It hurts. It's kind of an inconvenience, but it's just a quick trip to the urgent care. I can get a splint on the finger, and maybe that cost is $500. Then the insurance has coverage for that medical payments coverage. And that can range anywhere from $1,000 up to $5,000. I've even seen some companies where they offer $10,000. For the liability coverage, back to coverage E, that's going to range anywhere from $100,000 up to $500,000. It just depends on the carrier. All right, let's get into those insurance deductibles. Now, as you recall, I talked about some of the costs that are associated with insurance. Deductibles are ways that you can take on more of the risk, which means that you're going to pay more of an out-of-pocket cost. The insurer doesn't have to pay as much out-of-pocket cost, So in return, that means that they're going to lower the premium based on you having a higher deductible. And if you're familiar with your health insurance or your car insurance, you may have already dealt with this, where the higher that deductible, the lower that insurance cost. Now, in addition to that being a factor, there could be multiple deductibles, and at least two for homeowners insurance. So you have something called all other perils, and then you have your hurricane deductible. So let's first touch on the hurricane deductible. The hurricane deductible is going to be for hurricanes, hail damage, windstorms. You have your hurricane deductible that falls under that. And that is typically going to be 2% of what we're insuring the building for. So again, in the example, the building being insured at $300,000, your out-of-pocket expense would be $6,000. That means that you are responsible for the first $6,000 in damage from any type of hurricane loss or hail loss. That's going to be your primary out-of-pocket cost that you have to pay. And then insurance will kick in thereafter. Now, when it comes to your all other perils deductible, that's going to be anything that is not that hurricane or hail, right? So it's going to be things like fire damage, smoke damage, lightning damage, and that carries a separate deductible. That can range anywhere from $500. I've seen all the way up to $10,000, but it could be $500, $1,000, $2,500, $5,000, and then $10,000. $1,000 to $2,500 is about the average that most people choose. And again, that is your out-of-pocket cost should you suffer a loss from something like fire damage or lightning damage. Now, the question is, can you have a deductible that is lower than 2% for a hurricane? Yes, you can. With some insurance carriers, they do offer a 1% deductible. I've seen some might offer $500. It's not as common, but yes, there are some options with certain carriers that do allow you to have a little bit of a lower deductible. And you'll be surprised that it's actually not that bad when you look at the cost of it. It may be several hundred more dollars over the cost of a year. But if that means that you have to come up with 1% less out of pocket, which could be thousands. So let's walk through that example. Let's say for 1% deductible, it's going to cost you $400 for the year. But that 1% means that your out of pocket is only $3,000 on a home that we're insuring for the $300,000 versus having to come out of pocket $6,000 for that 2% deductible, right? So if it's $3,000 less that you would have to pay out of pocket, that $400 cost might be reasonable for you. That might make sense for you to go with that lower deductible if that is an option. All right, now people always ask, well, what are some of the things that insurance policies cover for? So you have two different types of coverages. You've got named perils, which is typical of an HO3 policy. And then you have open perils, which is typical of an HO5 policy. These are two different policy types. The names account for, special form or open perils form. And you can see with an HO3, which is on the left, that named perils, you can see some of the things that are going to be covered. So they specifically name those items that will be covered if you suffered a loss from it. So if you had, vehicle damage, a vehicle runs into your house, or if you had a falling object, maybe something from the sky falls onto your home and damages your roof. Maybe you have, the fire or lightning that strikes the home. All of those things would be covered. Hurricane coverage included there as well. On the open perils, it functions a little bit differently. It doesn't say these are the specific things that we will cover. It actually says we're going to cover any risk that happens except those that we specifically exclude. And they will exclude certain things like flood. Flood is not covered under your homeowner's insurance coverage unless you are able to add it back by an endorsement, meaning with that endorsement, you're going to pay more money, but you can add it back to have coverage for flood. But by and of itself, the homeowner's insurance policy does not cover flood. That is going to be an exclusion across the board. And then you can see some of the other things that are not included. I did try to identify some of the things that can be purchased back, depending on who the carrier is, what they might offer. The age of the home may have an impact on that as well. But again, there are some things that you can buy back depending on what that carrier offers. But just know that you've got these two different policy types, and these are the things. And also with an HO3 policy, with the named perils policy, that is also going to have exclusions as well. So they list out the things that they'll cover, but they will also list out the things that they do not cover. And these two things typically match, right? All right, now let's talk about coverage endorsements, because I've alluded to coverage endorsements by adding flood coverage back if the carrier has that endorsement. But this picture is a great example. A lot of people don't realize that for a screened enclosure, if you have a pool, or if you just have a patio area that has a screened enclosure, there may not be coverage extended for that in the event of a hurricane or hail, windstorm. And so that may be a coverage that you have to purchase back. So you want to work with your broker or your insurance professional to determine, is that a coverage option that I need to purchase back? And that can be anywhere from $150. I've seen as much as $400 or $500 for the year. Water backup. So if you have city water, city plumbing that backs up into your home, this might be something that you're interested in carrying. Most carriers offer an endorsement for this up to $5,000. Animal liability. This is important if you have any animals. Liability coverage that we talked about for coverage E is not typically going to be extended to those animals. And so you may need to buy back that coverage, or you can purchase a separate policy altogether for the animal liability. And then that way it's not connected to your homeowner's insurance. And then you can see things like refrigerated items. If power goes out during a storm and you end up losing all the items in your refrigerator, this gives you the option. In some cases, some carriers offer you to buy that back up to $500 to replace those refrigerated items that were lost. And then in cases where the home is older, an endorsement can also mean that the carrier is taking something away. So it doesn't always mean that they're adding something. It could mean that they're removing something. So sometimes when homes are older than 40 years and they haven't had any repiping or replumbing done to the home, the carrier may say that the most amount that we're going to pay for a water claim is going to be this $10,000 amount. So we call it a $10,000 water limitation. And in that event, if you have sudden accidental discharge of water from one of your appliances, or if you have a burst pipe in your walls, the most amount that they would pay is up to that $10,000. And you are also subject to that deductible that you might have. And I did skip over. I want to jump over here really quick. We talked about the all other perils and hurricane. Sometimes the carrier will have separate deductibles for water losses as well as for roof losses. So you want to be mindful of that. That water deductible is usually going to follow the all other perils deductible. So it could be just that stated dollar amount, $500, $1,000, $2,500, $5,000. The roof deductible is typically going to be a percentage deductible. So it may be a 2% deductible, much like your hurricane deductible. But going back to that limited water, if you are looking at an older home, just keep in mind that you may be limited to just that $10,000 amount instead of up to that $300,000 amount in the example that we're insuring the home for. All right. Now, there's a question here. Is it typically less expensive to purchase a separate animal policy or to add it to your existing homeowner's policy? Great question. It is going to be a little more expensive to have a separate policy, but I did have a a client who, unfortunately, they had a dog in the household that did bite someone. And as a result of that, they actually were canceled by their insurance carrier. As a result, they had to get a separate homeowners policy that had no liability coverage whatsoever. Then they had to purchase a separate liability policy just for the general, purpose of people coming onto their property and having liability, but it did not cover animal liability. So then they had to turn around and buy a third policy for the animal liability policy. So I caution people, anything that's tied to your homeowner's insurance policy, if there's a claim, know that there is always the possibility that the carrier could make the election to not renew that policy in the future or to set that policy up for cancellation. And so whatever you can do to try to remove that from happening and keep your homeowner's policy separate from some of those incidentals may be a good idea. So even though it may cost a little bit more money, it may save you in the long run. Excellent question. All right, so let's talk about replacement cost versus actual cash value. And in this example, it's going to be pertaining to your personal property. So let's say that, use my phone as an example. Let's say that this phone, I paid $1,000 for it, and I bought it last year for $1,000. So now the phone is a year older. Let's say that there's a fire. I was cooking and I left the phone in the kitchen, so it got consumed by the fire. And I had replacement cost on that policy. It's going to allow me to buy the phone using today's dollars. So let's say that the phone, to replace it, is now $1,100. The insurance company will initially pay out what's called actual cash value. And then when you provide receipts to show that you have replaced the item and what that cost is, then they will reimburse you for that remaining amount. Now, let's say in that same example that you did not have replacement cost on there, then all they're going to pay you is that actual cash value, which factors in depreciation, right? So they might say, well, you paid $1,000 for it a year ago. Now it's really only worth $800. And so I'm only going to get the $800 for that phone replacement, which may leave me lacking, right? Because if that phone now costs $1,100 to replace, I've got to come up with that extra $300. Now, I want you to think about not just one item. Think about all of the items that you might have in your home. And are you okay with the actual cash value principle where the depreciation is being factored? Would you be able to repurchase those items that you'd like to have in your home? Or would it be better for you to go with the replacement cost option? What I tell people what to think about is how long have you had the item? If you are bringing items into your home that you've had for a while, maybe actual cash value is fine. If you're going to bring all new items into your home, then you may want to consider replacement cost. Now, another thing I want to touch on is the stated value roof versus the replacement cost value roof. So the stated value roof is going to be a agreed upon, not that you have any say in it. The insurance carrier has all of the say. And so they will determine what that replacement value is as of this date today. And maybe they say that the roof is worth $20,000. If you were to suffer a loss and the roof had to be replaced, then that's the max amount that they will pay off because that is the stated value that they have come up with. Whereas a replacement cost will say, well, the roof might cost $30,000 to replace with the replacement cost dollars, what have you. And so the insurance company would pay up to that $30,000 amount subject to your deductible. You are always subject to your deductible. Now, the stated value roof will save you some money. If you wanted to go that route with getting that type of coverage, but just be mindful as you're getting quotes. If you see anything with the stated value roof, you want to get a comparison of what it would be with a replacement cost roof versus that stated value roof, because it may not be that much of a difference. And so just make sure that you are aware of what what you're getting when you're purchasing the policy. Now, another thing I like to point out is market value versus replacement cost. And so this comes up quite often. And we're kind of in this period right now where we're seeing home prices decreasing a little bit, but the replacement value of some of those houses is still remaining a little bit higher because the cost to rebuild might, it's still high. We're still dealing with the cost of labor. We're dealing with the cost of supplies. And we know that all of those supplies have increased in cost since COVID era. And so you may be paying a certain amount, which we call market value, for a home based on things like the location and what have you. But then with the replacement cost is utilizing a tool, and it's going to be a software that looks at all of those various features and characteristics of the home. And based on those features and characteristics, we come up with the replacement cost estimate of the building. So we're not looking at the land or anything like that. We're not looking at, is this the hottest, newest area or location in Florida? We are simply looking at, in the event, in this territory, in the event that there were a loss, a total loss of this home, what would it cost to rebuild that home on this lot, on this land? We're not going to insure the land, but we are going to insure that building, right? So that's where you'll see a disparity where it may not equal the cost, the replacement cost of the building may not equal what you're paying for the home itself. Number one, because the land's not included. And number two, because we don't look at the market value. We simply look at the replacement cost. I promised you we would touch on insurance scoring. A lot of people didn't realize that insurance score modeling was being used in insurance cost calculations. You would hear people say, well, my neighbor's paying less money and we have the same exact house. Why am I paying more? Well, it could be based on that insurance score. And as you can see from the list, it could be anything from that payment history, the length of credit history, number of open accounts, prior insurance coverage. Did you have any prior claims? The location and characteristics of the home. Is it a frame home versus a masonry concrete block home? All of those things play a role in that cost. And that insurance scoring is going to be the differentiator in that. And then I like to do a side-by-side so that you're able to see the insurance score versus like what mortgage credit scoring looks at. And so from the perspective of a credit score, when you're looking at a mortgage, you're trying to determine your loan eligibility. The insurance score is trying to determine the rate that you're going to be paying for the premium for your insurance. And so you can see here, there are proprietary models that the insurance companies use. There's not one thing that they all are looking at, unlike credit scoring, where there is a FICO score and a FICO model. The insurance companies are able to determine however they want to do their modeling. And we don't have an inside lens into that. But the things that I mentioned are things that are typically looked at when they're looking at that insurance score. All right, and then total protection. So when we talk about homeowners, we would be remiss if we did not also touch on other areas of insurance. So when you, if you're not a homeowner yet, if you're renting, renter's insurance is very important. A lot of people don't realize that your landlord is not responsible for replacing your belongings in the event of a loss. So if you have a house fire, if you suffer any type of loss there, they don't have to replace any of those things. That's your responsibility. And renter's insurance can provide you with that protection to protect your personal belongings. So if you don't have renter's insurance, you may want to consider that. It also helps with that insurance scoring because now you've created that history of insurance payments. You also want to consider life insurance. Again, you're making a really big purchase. If you're leaving this as a legacy for your family or your children, you want to consider life insurance, because in the event that something should happen where you're no longer here, the life insurance could pay off the mortgage, and it gives stability to your family or your loved ones so that they continue to remain in the home. You also want to consider home warranties. Unless you're buying brand new construction where you're the only person that's lived in there, there's no guarantee that something won't go wrong. And so home warranties are a great way to protect you because you're able to have coverage. Flood insurance, as I mentioned, it's an exclusion for homeowners, so you want to consider that. Auto insurance, you may be moving into a new area, a new market, and so you want to look at your auto insurance because the rates may change, they may decrease. There may be an opportunity to get a bigger discount now that you're a homeowner. And so let's see what we can do to get the auto insurance at a cheaper rate for you, right? And then umbrella policy. So as your assets grow, you want to have additional protection. As I mentioned, the liability coverage only goes up to a certain amount. You may want to consider higher amounts. So I'll give you an example. I have a pool. My max amount on my homeowner's insurance is $500,000 for liability. I have a $1 million umbrella policy on top of that because I know that having a pool is a big liability, and should anything happen, I want to make sure I'm covered. So I do have an umbrella policy that covers me in the event that something should happen. All right. And then I just wanted to show you really quickly a new construction quote. This is a home that was built in 2024 in Plant City, Florida. We can see the square footage is 2168. The replacement cost is $348,000. We can see that personal property is half of that at $174,000. Their liability coverage is $300,000. They've got 10% for ordinance and law, which is going to cover you if the building code has changed and the home has to be brought up to current code. It also has water backup with a $1,000 all other perils deductible and a 2% hurricane deductible. You can see what some of the rates would look like for that type of newer home. So it's not brand new construction. It is a year older, but we can see that the rates are still pretty good. Versus a 20-year-old home, it's a little larger in size. We're insuring it for a little bit of a higher value, right? We've got some of the same coverages in place. We've bumped up that ordinance and law to 25%, but we can see that the rates do change pretty drastically from there. And then the question on the floor is there a time frame for how long since filing an insurance claim that it affects your insurance score? Excellent question. So many carriers look at a 3 to 5 year period. Now, if it is a wind-related or act of God-related event, a lot of times they will give you an allowance on that. But again, it depends on the carrier, and it really depends on was it your claim? Was it a claim on the house? Some carriers look at all claims regardless of who filed it. Some look at just the ones that you have filed. So this is why it's important to have an insurance professional that is walking you through that process. Okay. Now, follow-up assignment. I'm not sure how I could get this to you all, but I wanted you, since we are in hurricane season, to track your personal belongings in your home, because you would be surprised at the amount of things that we own that we don't even realize. And what you can easily do, because again, a lot of us have these smartphones, we can video, we can, do messages, what have you. Go around your home, do videos, go in every closet, go in every room, go in every drawer. I want you to take videos, and then I want you to create an email address for your home. So if you live on 123 Main Street, then your email address would be 123mainstreet@gmail.com. And when you create that email address, then you can send all of those videos to that email address. And now you have a repository of what the home looked like before hurricane season started or right before a storm started. So anytime they say, oh, storm's coming, hurricane's coming, take those videos, go around the interior of your home, the exterior of your home, email it to that address, delete them off of your phone so it's not eating up your memory. And now you have a way to prove to the insurance carrier what was in place prior to the loss if you do suffer a loss. And that's what I have. Let's see. Oh, you can send an email to Royce@realtywithroyce.com to request a copy of the personal belongings tracker. So that's how we can get it to you. Thank you so much for your time today. I have one last slide. If you want to get a hold of me, here's how you can do so. Please contact our agency if you have any additional questions. If you have started your journey and you need some assistance with homeowners insurance, let us know how we can help. Our expertise becomes your peace of mind. Oh, you're muted.
Yep, you can't hear me. Sorry. Thank you so much, Tanya. This has been very informational. This is a lot of valuable information, especially the great advice and the tip about creating an email just for your home. I remember I have been to one of Tanya's trainings, and that blew my mind. It's like I never thought to have an email because, you know, in some cases, like, you know, California with the fires, if everything gets destroyed, this is a digital footprint of everything. And it's really simple and easy to just send an email to yourself. And so that is a really, really good tip along with everything else that she mentioned. I do want to share, and maybe Tanya can tell us a little bit more. She does more than just homeowners insurance.
Yes.
So can you share a little bit about some of the other things you can help some of the people with?
Absolutely. And I'll actually go back to this slide because all of the things you see here, our agency is a full service agency. So we can help you with everything.
Awesome.
Auto insurance, life insurance, annuities, home warranties, everything under the sun, motorcycles, boats, RVs. We do a little bit of everything. So let us know how we can help you. And business owners, we do commercial, general liability, workers' comp, whatever you need. Trust me, you can. I'm a one-stop shop. So come here first. And if not, then I will help you navigate where to go.
And I will add too, for those of you who may have missed it in the beginning, she is a broker. So she does have the ability to shop all of the providers. And so you don't have to go anywhere else. Like she's going to do that work for you. And that is just so mind blowing. I send a lot of my people to her so that they can go ahead and have her shop so they don't have to get all of these quotes because she can shop all of the providers for them. And so if you have or if you are a current homeowner, I strongly encourage you. And if you could show the slide again with your contact information,
Yep.
I strongly encourage you to reach out to her. We are, if you're living in Florida, we are in a hurricane season and you don't want to wait until you have a disaster or something happens to your home or any of the other items you may need assistance with, like auto insurance, things like that. We've had hail this year, which is kind of crazy already. I haven't seen it physically, but in certain parts of Tampa, there was like, it's hailing. And I was like, I'm glad I'm not over there. But these are things that you really want to think about before you have that happen. So thank you again, Tanya, for being with us today. Before we leave, I want to let everyone know that we do have our next class on July 14, which is next Monday. We're doing a different time at 7 p.m. We will be covering how money works with Kenneth Taylor, who is a financial advisor and financial educator. And so if you're a homeowner, you know, just a human being looking to improve your financial situation, he is your guide. This is going to be a training class that you don't want to miss. So definitely feel free to join us. Again, if you would like to receive, and Tanya also, if you're already reaching out to Tanya to get a, you know, second opinion on some of the insurance you have, or if you're purchasing a home and you need a quote, feel free to also reach out to her. If you're already talking to her about receiving the belonging tracker. If not, you can just send an email to Royce@realtywithroyce.com and I will ensure that you get a copy of that belonging tracker. I can't stress enough how important that is. People have lost their homes in fires or hurricanes, tornadoes last year. So you definitely want to be prepared and have all this information secure. With that being said, is there anything else you want to add, Tanya?
Thank you all so much. Don't hesitate to reach out. If there's anything we can answer, we want you to know that you have support here. So let us know how we can help.
All right. Well, until next time, everyone. See you later. Have a good day.
Bye, everyone.
Bye.